right?
Yeah, it is
Yeah.
live streamed as well on YouTube.
So Sumit, typically we have about 50, 60, maybe 100 people, depending on how it goes, joining in live. And then typically the videos end up with anywhere between 500 to 2,000 views on this. So that's the sort of audience that you would potentially reach with this. But this is a very interesting topic. Every time we post on our LinkedIn, Twitter, etc., we end up getting decent amount of engagement.
So I'm sure we'll cross those today because CoinDCX has a bunch of their customers.
Really? I am not sure if, if we also posted it from our channels.
Yeah, I think that happened a couple of days ago. Yeah.
Okay.
Let's start, Anurag.
Yeah, I think we are at a decent number now. I think we can start and others can join in. Yeah, so let me start. Well, good afternoon and welcome to the IMA Public Policy Alumni Special Interest Group webinar series. As many of you know, the alumni special interest groups at IMA are knowledge and collaboration platforms that bring together alumni, faculty, and students and leverage the collective intellectual resources engaged in areas such as healthcare, education, entrepreneurship, marketing, and public policy being one of them, which is what under the aegis of which we are talking about today. We do this, of course, to bear on the most challenging issues of our times. Now faculty and alumni are already making stellar contributions to their respective fields, but the ASIG platform allows them to collaborate with each other much more intimately and to engage with industry and practitioners in a much more multifaceted manner. Now, to facilitate this interaction, we've created 14 such alumni special interest groups, and of course, more will follow in due course. The public policy ASIG in particular is a group of alumni and faculty of the institute with expertise and interest in the field of public policy and development. And it fosters collaboration among the IMA community, which is faculty, students, and alumni, and the wider world of public policy practitioners to contribute to India's inclusive development agenda. Now, the public policy alumni special interest group has been around for a while, for a couple of years, and it has done stellar work in terms of having several of these sessions. Earlier, we've had very prominent speakers participate in it, and it has led to very important knowledge creation and very important reports that have reached the field departments. Now, this initiative is, of course, a new initiative that we are currently and we have taken up. An important activity of the ASIGs, of course, are the webinar series, which bring the thoughts, views, and expertise of renowned experts to the IMA community. Now I pass it over to Akhilesh Tilotia, one of the alumni coordinators of the Public Policy Alumni Special Interest Group, to introduce the new webinar series on cryptocurrency that the ASIG has embarked upon. Akhilesh, over to you.
Thank you, Anurag. As Anurag mentioned, we have been at the Public Policy Alumni Special Interest Group, been engaging on various topics of interest with respect to conversations with experts and policymakers earlier. Over the last couple of months, thanks to Kamal, my IMA 2004 batchmate, we have been running this series on the cryptocurrency bill that is potentially coming into the parliament sometime this year. Hopefully, it's not coming up in the monsoon session now. So our idea was to put together all the various perspectives that we could gather on this rather interesting topic, new technology, and lots of interest from global regulators, whether it is the SEC or whether it is the central banks, and including here in India, also the tax and other authorities. There is a lot of interest in trying to understand what is happening in this sector and how this can be regulated or treated in a manner where this exists effectively without, in some sense, creating public policy related concerns. So our idea at the public policy ASIG was to get a range of these perspectives and hear from various stakeholders so that we can then begin to formulate our own thoughts and opinions on it. Very thankful to Kamal for taking the lead in this. Kamal is an expert himself and has taken a very spectacular session on the basics of cryptocurrency across the world and in India. If you haven't already seen his session, a must watch on the IMA YouTube channel. Over to you, Kamal, now for taking us through this day today. Thank you.
Sure. Thank you. Thanks, Akhilesh. So as Akhilesh was saying, right, what we are doing is looking at this as a webinar series and looking at people from all over the crypto space who can come in and talk and share their perspectives. So if you've been following the webinar series, like Akhilesh said, the first one was a walkthrough and introduction to Bitcoin, blockchain, and cryptocurrency. The second one was a conversation that we had with Mr. Rashim Sood, who represented the cryptocurrency exchanges in the Supreme Court when they went up against the RBI circular. Today, we have another person who is playing a key role in the cryptocurrency industry in India. We have Sumit Gupta, who is the co-founder and CEO of CoinDCX, one of India's largest and safest cryptocurrency exchanges and liquidity aggregators. He's been an entrepreneur throughout most of his life. Along the way, he saw the potential of leveraging blockchain technology to enable financial inclusion. He ended up founding CoinDCX, which has become India's largest cryptocurrency exchange. I believe CoinDCX is responsible and behind almost 50 million Indians who have entered the crypto space in India, right? CoinDCX is also an application which allows people to enter into the cryptocurrency space by using INR. As we go through this, we will probably understand more around what it takes to run a cryptocurrency exchange, right? Sumit holds an undergraduate and a master's degree from IIT Bombay. And with that, would like to welcome Sumit onto the platform.
Thank you, Kamal. Pleasure to be here today.
How are you doing?
Doing very well. So this is what Sundays are like in the world of crypto.
Yeah, I know. In fact, one of the first questions I had was around that, right? Which is, how crazy is it, right, to run a cryptocurrency exchange, especially in a place like India, right, where you have so many customers and so much potential? What's the experience been like?
Sure. It's very exciting, but also challenging at the same time. I usually spend my weekdays with the regular office work, and weekends are like where I have to take interviews and then build the team, grow the team. Sometimes talks to customers, do events like this. Sometimes going to colleges. So that it's you, just like crypto markets on 24/7. You also have to be on your toes 24/7. One interesting thing that people say is that 1 year in crypto feels like 2 to 3 years in other industries. So I can feel that rush sometimes. It's full of, as I mentioned, full of challenges, ups and downs. In fact, our journey of CoinDCX, which is little more than 3 years now, has seen that multiple times. In fact, I remember when we were about to launch the exchange, 3 days before that, RBI came up with this circular. RBI, which prohibited banks to work with crypto businesses. So then we had to change things overnight. And then after that, Bitcoin prices started falling down. Banks were creating challenges. Then we had to switch to a P2P model. Then we had to file the Supreme Court case also under IMAI. So a lot of these challenges, I think they are part of life now. So you have to be on your toes 24/7. Plus, top of that, you also need to stay very competitive because you are in a business which is growing really, really fast. Crypto fundamentally is borderless. So you have to catch up pace, not just with innovation happening within the country, but also what is happening outside. you have to solve problems not just on the business side, but also problems on the legal, regulatory, compliance, and a lot of these are unknown variables. You don't know. There is no answer. There is no answer to it. So yeah, I mean, and apart from that, because of all of these different challenges, which is multi-dimensional, I think that just makes the whole startup journey even more exciting and full of learning. Of course, it's challenging, but it's just, I think, one of the phases in my life where I've learned the most. So and if you are into crypto, you have to like really believe in it. Otherwise, it's very easy to give up. So if you really are into the space, and you have to go through that experience, right? I'm sure you also in the space from a long time, right? As per our previous discussion, so you could feel with that emotion. So yeah, I think that just keeps you going. So overall, if you look at it, a graph, on the x-axis, you have to survive. It's a axis of survival. You have to keep going, you have to keep running. And then the y-axis is like innovation. You have to keep innovating amid all of these uncertainties. So yeah, I mean, very interesting journey, very interesting industry also, and it's even more interesting when you're operating in a country like India. So that's what it is like.
Yeah. So for me, I can totally relate to what you're saying one year in crypto is like multiple years in other markets, right? So, but for me, the experience has been largely as an investor. But I totally understand what you're saying, right? I mean, 4 years in, I'm like, nothing can baffle you based on what the market do.
Yeah.
So,
And every day is full of learning, right? Every day is full of learning. There's so much happening in this space, like in different directions. You always feel like, oh, there's a lot more to do. There's a lot more to learn. There's a lot more to grow. So that just keeps you going.
Yeah. No, and you talked about something interesting from a startup ecosystem point of view, right? I'm guessing one of the challenges probably for crypto in the last 3-4 years has not been to attract customers, because you're getting all the customers. People are more than willing to get into crypto. I'm guessing the challenges would be more around scale or just building the platform so that it can manage scale and complexity.
Yeah, that is also there. In fact, even like stock markets, they run for a specific amount of time. In crypto, you don't even have the flexibility to have a maintenance period. It's just market on 24/7, and then even if you are down for maintenance for like 3 hours, the markets can go up and down, right? So you have to essentially plan all your tech infrastructure, which I mean, the team would be able to tell you more about it. But I think I still remember during our Slack conversations, people are even sometimes online at 2 a.m. in the night. If something happens, if Dogecoin pumps, prices goes up, then suddenly there's a spike in the traffic. There are like lakhs of customers using the platform on it at the very moment, and then prices are also volatile. Market is also volatile. So yeah, I mean, these are also something different, which is not very common in other industries, right? And the scale, definitely the sheer scale, and you're handling right money, right? So any small glitch in the system can cause big losses. So you have to be very particular when it comes to how your platform is operating, and you have to be up and running all the time, you as well as the platform.
Yeah. I totally understand what you're saying. So you talked about the 2018 ban and launching just around that time, right? And since that time, I mean, the industry has come a long way. The ecosystem has come a long way. A lot more people know of crypto, right? However, if you recall, in the last, I think 3 months ago, RBI, I mean, there were some issues in crypto exchanges getting access, right, to accounts, so that people could onboard themselves and put in fiat money and participate on the platform. And I remember RBI came out with a clarification a couple of months ago saying that, the 2018 circular, which was being quoted by banks, saying that, these are the reasons why we are not looking to service crypto exchanges. RBI basically said you can't be quoting that circular, right? So since that circular has come out, what has changed from an industry point of view, from a crypto exchange point of view? Are you seeing improvement in the ability to function and integrate with the financial ecosystem in India?
Sure. good point, right? So just to let's step back a little, right? So three important things happened, right? See, on 6th of April 2018, RBI, as you all know, came with the circular which prohibited banks or RBI regulated entities to work with crypto businesses. It was not a ban per se. It was a, you can call it a banking ban, right? Where banks were prohibited, right? People could still buy and sell. But the nature of the industry is such that if people want to move from a fiat economy to a crypto economy, banks are the only ways. You can't do those transactions without the banks in place. So that was sort of like the thing which sort of almost killed the industry, right? People could not do direct bank transfers. So exchanges had to shift to innovative ways like peer-to-peer way to buy and sell crypto, right? I think I remember on 15th of August 2018, Coindex launched our product called D6 Insta, which was like where we did some innovation and then two people could directly buy and sell with each other. And that was also in a matter of a minute or so, right? So we had to constantly fight with those sort of challenges that we faced along the way. So that happened for like almost 2 years. And then IMI, along with the industry participants, even Coindex was an active petitioner in the case. I myself was a petitioner in that. And so we all fought together. And, after almost 2 years of hearing in the Supreme Court, this judgment came on 4th of March, right, which squashed the RBI initial circular. And then what was happening is when we were approaching banks in their forms, bank account opening form, there were certain lines that you have to confirm that you're not operating in a virtual currency business, or all of those things were there while we were opening bank accounts. And banks sometimes could say, no, it is because they report ultimately to the RBI. So they were like, we were told by the RBI to not, and this is after the Supreme Court judgment, that we cannot work with crypto businesses. And then we were like, no, this is the Supreme Court judgment. And then the confusion was that no, RBI has not given any circular which says so, right? So that was basically the whole confusion. And banks have never been skeptical. I think they were very much open. It's just that they were stuck in between where RBI has not given them instructions, and on the other side, crypto exchange is saying that okay, the Supreme Court is saying this, right? And the 2018 RBI circular is no longer valid. So that was the problem. And then because of all of these challenges, and then everyone was approaching RBI, and then there were some sort of RTAs that were filed that what is the reality? What is the reality? And then RBI had to come up with a circular saying that okay, banks cannot cite RBI circular anymore. And then now they have left it for banks to carry out customer due diligence processes in line with AML, KYC, CFT, PMLA, and make sure that they are compliant with provisions under FEMA and all of that. So that was the basic challenge. I think my experience has been in this that banks essentially, they have no problem in working with exchanges. They just don't have the clarity. They just don't because ultimately this clarity comes from the RBI. That's the body that they report to. So, and RBI, as we all know, is not in very much favor of the whole crypto space. So I think that is where the confusion from. And banks, even if they want to work with crypto businesses, even if they feel that okay, because they are also seeing the benefits, or they are also seeing the business that is coming to them, because of all of these complexities, they are right now, things are stuck in a dilemma. Thankfully, we are currently working with a lot of banking partners. Because there is no clear-cut guidelines as such, RBI has not given them clear instructions. It depends on banks to banks, and we have not seen any major reservations. Of course, there have been challenges where one bank suddenly comes up and says that okay, we don't want to work with you, or we can't operate your current account, even though if it's for salary. Sometimes that is also a challenge. So I mean, we discuss with the banks, try to explain them, convince them, okay, this is the business that we are doing. These are the KYC guidelines we are following. This is how we are making sure that nothing wrong happens via the platform. And not just banks, but we also work with few payment gateways. And payment gateways, some payment gateways are supportive, some are not. What I have seen personally, and these are like top payment gateways in India, if during 2017, the bull run, right, when the PGs were supporting crypto businesses, right, they have seen the highest traffic ever, right? And the highest business ever. So that is the sort of power the banks and the PGs have seen. Just that the whole complexity, the whole uncertainty around this RBI circular and no clear-cut guidelines from the government side is something are sort of creating some frictions. But I think that's just will get solved over time. The market is growing, almost like $1.6 trillion now, and I think as and now with the recent circular, I think banks will have to understand how exchanges are operating. So RBI has now delegated the responsibility to the banks, and banks will now figure out their ways on how can they work with businesses, because I think this is a great opportunity for even banks. Any bank which adopts to this, or which because it's basically risk, right? Managing the risk. So any banks which figures out a solution to this, I think they will do that. One bank will come up who will try to stay ahead of the competition and the whole technology curve, and will try to work closely with crypto businesses, and they will manage things at there. They will put guidelines on the exchanges so that they are complying with all the necessary laws of the land. And primarily, I think this is a big space or opportunity for even banks. And with that in mind, I think banks will do that. And I think one banks will start doing that. Other banks will try to catch up, because then they will see that, oh, how fast they have grown in terms of deposit, in terms of customer base. So banks, even some banks might choose to stay away from it, depending upon risk. But I think this will change over time. I think the major shift might happen when you will see massive interest from institutions. I think that's the same trend we have seen in other countries as well, primarily US, because that's where the majority of the capital comes from. So when that happens, I think banks like, for example, in US, JP Morgan, Citi, Morgan Stanley, Goldman, all of them are now currently building products, crypto products to serve their clients. And even though India situation might be different, but I think that will soon change. And maybe in the next few years, Indian banks might even start offering crypto custody solutions, right? So I don't think banks will stay away from it, or they are finding an excuse. I think it's just a matter of time, and banks are also regulated entities, so they'll have to comply with the laws, but there are no laws in crypto. That's where the whole challenge is coming from.
Correct. Got it. No, because I think what a lot of investors would have been expecting is the day the RBI circular came out saying you can't quote the 2018 circular, which has been overturned. I'm sure investors are expecting the next day they'll be able to start loading fiat, right? Which is the fact is it won't happen that quickly. It will take time for the banks to do their due diligence and enable crypto exchanges.
Right, and we have been discussing with the banks, but things move slow. Things move very, very slow, especially in this. And I think we have been talking to the banks, but I think situation has not changed a lot since then. Even right now, there are not many PGs who are working, but so I think even if there is essentially the bridge, right? The bridge which connects the fiat economy and the crypto economy, even if there is hello.
Yeah, I can hear you.
Yes. So even if so there are a lot of people on the INR side, and there are a lot of people who would want to cross the river and go to the crypto side. Even if there is one bridge, or people will cross. People will be able to cross. If the bridge is stronger, if there are many, I think more and more people will be able to cross that. So I think it's just a matter of that.
Yeah.
People who want to invest will still invest. So I think things will open up. Things are still opening up, and I don't see any major challenge as of now. It's just that it can be much better if the guidelines are there from the government side.
Got it. The other question I had was around, so integration with the banks is what we've covered. But if you look at integration with other fintechs, right? You have so many. You have Paytm, PhonePe, MobiKwik, Google Pay, so many fintechs. What role do you see them playing, either as a gateway or maybe even as crypto industry participants?
Sure. See, interestingly, I genuinely believe that I think these traditional fintech players are going to bring the next set of customers. right? If we keep aside the bull run, because the price will also get a lot of people interested in the whole crypto. But if we keep that aside, I think these traditional or these fintech companies have a big role to play in crypto adoption, and they are also going to play a major role in this shift of wealth from fiat economy to crypto economy. Why? Because I think uh, see, they already have the distribution channel sorted, right? They already have a massive customer base. They already have KYC figured out. They already know the customers. They already have the capability to have this, wallets. They have the wallet. So I think they are naturally one of the best players to quickly onboard customers, and it's for customers. Ultimately, for customers, the whole experience is simpler, right? So I think sooner or later, these companies, right? Phone Pay, Google Pay, you mentioned about Paytm. I think they are going to open the floodgates for crypto in the country. It will happen, just a matter of when. I think that also depends on again, regulations. So when it happens, they will open up, and they will integrate with exchanges like CoinDCX. No, I don't think everyone wants to build exchange. They might want to become like a broker. They might want to integrate with exchanges, just like how companies like Grow or Upstock does it with NSE. They might also want to follow the same route, and their customers can now, just like how Paytm has Paytm Gold option, you can similarly purchase Bitcoin. So I think that is and that will make the whole investing journey, far more simpler for the customers. Exchanges will play a critical role in that, because that is, they will provide the infrastructure, and then the whole category will also grow. All of that execution will happen on the exchanges itself. So I think overall, and the same trend we have seen in the US as well, right? When PayPal started offering, and then you've seen a lot of this new institutions coming in and putting in money, the prices started going up. It's a whole chicken and egg problem, right?
It's a virtuous cycle.
Yeah. Yes, a virtuous cycle, right? So I think this is going to happen. I think the only friction here is, again, clarity, right? Again, in this part also, that is what is stopping the industry from seeing that growth. People are on the fence. They want to invest. It's just that all of this confusion around regulations is what keeping them on the fence. But otherwise, I think people who try to understand, I think, for example, like, and you understand the space, right? You know the nitty-gritties of that, so you get comfortable. But not everyone does it, right? Not everyone just goes deeper into the space and invests. They might not have the conviction. So they would want to see what people are talking about it, what the government is saying about it. I think the moment there's even slight bit of clarity, and we have seen that in post March of 2020, right? India market is going to go really, really big in crypto, and not just on the investment side, but I strongly feel that in terms of startups also, you might see hundreds of startups coming every month, or in the space, and possibly a lot of them will even become billion dollar companies. And India has that much potential, because there's so many techies, developers in India, and they are curious, and I think there are a lot of companies outside India who are also hiring. So the traditional fintech players have a lot of role to play in terms of making crypto more mainstream, right? We as industry players are doing our job in terms of how we can take crypto to common people. But I think a lot of that awareness will also come from existing players, because you don't have to reinvent the wheel now. It's already there.
Yeah. And you talked about very interesting topic. How is the talent pool that you have come across, right? I mean, because blockchain as a skill set hasn't been around for the longest time. So how easy or difficult have you found talent while building up your exchange?
Very, very difficult. Generally, it's difficult to find talent in India, right? Even if you're doing a normal startup, as you can see, right, with the pandemic, global companies are eyeing Indian talent. They are offering massive salaries, right? So even for a normal business, difficult to hire people, especially when it comes to product and technology. But for crypto, it gets even more difficult and challenging for you, because then now you don't have to hire people. You just also have to see if they are interested into this space, and then the whole regulatory part also comes into picture, right? And that is good as well as bad, because it just filters the noise, right? And you get people who are deeply passionate about the space. I think that is how I look at it. But of course, hiring is always challenging, right? No matter which industry you are in. And definitely, I think in terms of the whole blockchain technology, you don't have many people in India who understand. I think that's also a massive area of opportunity. Anyone who is into the domain of technology and who just let's say if you want to stay ahead of the curve, let's say if you want to just jump 3 years down the line, I think doing something in this space will take you there. So it's a very good opportunity. I think people who read about it, I think they have a lot of people have decided that. So we also sometimes get really passionate people who want to work in this space no matter what salary they're getting outside, which is a great advantage of being a part of such an innovative industry. But I mean, overall, it's challenging, and then it's also one of the variable that we have to solve in the equation.
Right. So when we talk about regulations, right, and you talked about the fact that there is a general lack of clarity, and it's not just India, it's also around the world in many countries, right? But when you talk regulation, there is usually this thing about KYC AML, right? That's usually at the forefront of regulatory discussions, concerns that governments around the world have, right? So can you share a little bit more about how the cryptocurrency space in India, the players, how are they adopting KYC AML regulations? How do those compare to Indian standards? How do those compare maybe to global standards? Maybe some thoughts on that.
Sure. See, crypto is an unregulated space in India. So if you go by the laws, there are no KYC guidelines that are given to the exchanges to follow. But in spite of that, I think you would see all the exchanges have a KYC protocol that they follow. They verify the identity, PAN card, Aadhaar card, bank account, make sure that the money comes and goes to the bank account of the customer only, right? So we have all these checks in place, what a normal payment institution or a money business follows. And players have come together, exchanges follow. Just to make sure that all exchanges are following the right protocols and necessary steps under the regulatory code of conduct. So that is something that we do, and it keeps on improving over time. It keeps on evolving over time. And I think in terms of globally, there are various tools that are there. For example, in Coin-D6, we use an on-chain transaction monitoring tool. For example, any crypto that comes to the exchange or any crypto that goes out of the exchange, we follow the path. We follow the path that is it coming from the right sources or is it going to the right sources? There is a score. We check the score and it classifies whether that's a risky transaction or a low risk transaction. So there are tools, out there who you can just integrate with. Every on-chain transaction is tracked there. If it is coming from a stolen wallet address, and basically these tools keeps on updating their database. So if it is coming from a stolen address, the exchange gets to know. And then sometimes, some of the government officials or some of the, people, cybercrime, they reach out to us and say, okay, do you know about this address? And then we can track them all the way to the origin and then tell them, okay, this is the address, this is the customer, this is the KYC. So all of these things are in place already in Coin-D6, right? In terms of sanctioned jurisdictions, we don't accept customers who are in the blacklist or in the gray zone. We make sure that we match, so there are various triggers in the system depending upon the transaction volume. If the activity is abnormal or suspicious, the system triggers, and then we go into the details manually that why the person is doing this, and then we try to identify the behavior. If that behavior is suspicious, then immediately blocking the account. If that behavior is not suspicious, I think these are standard rules that banks also follow. The only difference is in case of banks, you would have higher privileges or you would have access to all of this information. There are companies, but in crypto, there are very limited tools that are available that an exchange can use. So most of these tools are risk management engines or these triggers we have developed in-house, which tells us that, okay, this is this is a high risk customer, this is a low risk customer. We certainly do not ask for hundreds of things from the customers because that's not practically possible. And but whatever information we have and on the transaction that the customers do, it gives you a sense, right, whether the transaction is genuine or the customer is doing the right activity or not. So these are some of the basic things that we follow. Apart from that, globally there have been a lot of advancements. For example, there is a tool that we use called OnFido, which tells us whether the identity is valid, and then they check with a certain database if the person has done any wrong activity in the past. In India, we check PAN card, Aadhaar card, just to verify that the person who is creating an account is the same person itself. We also do a liveness check that you are not essentially using someone else's ID to create an account. We also do a bank verification check, that is, the money is, for example, if Kamal is creating an account, you enter the bank account details, the money should come from your account only. Someone else cannot send money to your account. So all of those basic things are in place that we at Coindeces follow. Just that because there is no guideline, I think we can our life will be much easier if there is some sort of like 10-20 pointers that the government gives us, that okay, look, you have to follow this. I think that would be something really nice.
Yeah. No, so, and I'm thinking out loud, right? Because crypto is global from a network point of view. These tools would likely need to integrate with other exchanges as well, because the minute somebody sends money to a different, say a Binance hot wallet, right? Without the cooperation of Binance, you won't know where that got withdrawn to, right? Because then it goes into the hot wallet, and then
but most of this, for example, if someone creates an address online, right, or not on an exchange, it's difficult to know where that address is linked from, right? So most of the cases, I think 90% of the cases, you will get to know which exchange is coming from, because most of these transactions happens on exchanges. But I mean, the tools are also evolving over time. There's something called travel rule, crypto travel rule, that is also evolving. Countries are also trying to figure out the implementation. There are certain challenges with respect to implementation, but I think because the industry is also new, I think in the next few years, you will see all of these becoming more standard, and exchanges and countries enforcing sort of these sort of implementations to make sure that no illicit activities happens via the exchanges or using crypto.
Correct. No, I'm just thinking out loud, right? Even in the crypto space, I know people who are extremely law-abiding, but who would, in some sense, feel that they want that pseudonymity or anonymity, which I'm guessing some of these tools will remove over time.
I mean, see, I personally feel that if we want to grow the whole space, you have to work in coherence with the governments. You can't just fight with them, and that is the way to for mass adoption. And when you work with regulators, they will not prefer anything which will make them lose their power or control over the money. So I think that is the natural progression. There will be tools, there will be solutions that will come, and the same thing happens in the fiat world as well, right? I mean, in US we have US travel rule under the Banking Privacy Act, where you can track every single dollar that is flowing in and out of the US, and then they just open the space, right? You can now seamlessly flow the money, and that just makes the whole money movement very efficient, and the country also prospers, right? So those are the things that are good, right? The movement, from FERA to FEMA, that also evolved things for us, and India now is like a much larger economy. If you put in restrictions, it is not good for the country. If you just open up things for them, and you allow right things and you curb wrong things, I think that is the right way forward. The same thing will happen in crypto as well. The government will put will enforce some restrictions. Anonymity will not be allowed, because anything which is snatching the power from the government is something that the government will not allow. There are different opinions here, but I think for mass adoption, you have to work in coordination with the government and figure out right ways. I mean, if someone is not doing any wrong activity, what is the need to be anonymous, right? You will still have whatever power or whatever benefits this provides in terms of efficiency, in terms of cost overall. So I think that is, I feel from a government perspective, that needs to be solved, and it's a matter of time, because right now, even for things like travel, there are not 100% foolproof solutions. It will evolve over time, and governments will get comfortable over time, and they will in coherence will come up with certain guidelines, just like FATF guidelines. They will also, all the countries will comply with that, and things will be better, and countries will regulate crypto.
So since I'm guessing you're also connected to the global crypto space, right? Which are the countries that you think are at the forefront of doing the regulations the right way? which are going to help not only the people, but also the industry?
Sure, sure. So I think broadly countries which have taken steps in the positive direction are, I think UK has done it, Singapore, Japan, Canada. Japan is very progressive, even for crypto assets as well as exchanges. And in some countries, for example, we've recently seen El Salvador, they have announced Bitcoin as a legal tender. We are yet to see what will happen next, but I think that's a good experiment. UK is, I think, quite positive. The FCA there is, of course, they are tightening the regulations, but I think that's also good. Australia is also quite positive about it. So overall, I think the trend is progressive nations, right, are generally more open to something like crypto, and because see. Every country will also have their own set of things that they would want to prioritize. Just like in startup, there is a priority, right? So same applies for countries also. So I think for progressive nations, and then it's also a race, right? It's also a race. I mean, I've seen in Singapore, right? Singapore is quite positive about it. They have a Payment Services Act under which they also give exchanges proper licensing and under which you can operate. Now, the very interesting thing they have done is and I think that is the right way forward. You do not because technology generally moves faster than the law, right? So you cannot put laws which stops technology. I mean, if you put in very hard guidelines, the innovation will stop. So you have to let the space innovate, and then as per the innovation, you figure out some rules around it, which does not curb the innovation. So I think Singapore is very, for example, in terms of tokens, now there are like 10,000 plus crypto tokens that are out there. And we know, right, not everything is good. Now, how do you make sure that only the good assets goes out in public or gets traded? Even governments don't know, right? Or like sometimes you don't have the answer, right? So basically putting in guidelines there so that just like how RBI delegates responsibilities to banks who do most to exchanges, or even a independent body who will make certain decisions that okay, this is because see a lot of these answers are not known, right? But we know, just like during the internet boom, not every website that was built in that point in time is still running. I think in crypto space, and that happens with every new space, right? So how do you make sure that you are filtering the noise, you are only having good things running, and you are promoting them, right? Just putting a blanket ban on something is going to stop the entire innovations, right? So I think that is the thought process that we should have broadly, and a lot of countries are open to that. A lot of countries are adopting that framework. It should be very fluid, right? It should be fluid. That it should not be very written in stone that you have to follow this, because something even you and I don't know what will happen 6 months down the line, and anything which is written in stone, it would be difficult to change it, and it would make innovation difficult to happen. So I think fluidity in regulation is going to be very critical in terms of taking the industry forward.
Yeah, and you bring up an interesting point, right? Because even the FATF, right, the Financial Action Task Force, I think last year, recommended to all its member states that banning is not the way forward. You need to be regulating crypto exchanges in the crypto industry in your countries instead of banning it, right? So it's like you said, it's interesting to see how things will pan out, right? Hopefully, I think a lot of people in India, especially because of the history of the ban and the RBI circular and all that, are always wondering whether something like a ban will happen. But like you said, right, looking at the efforts that the industry is putting in to self-regulate in the absence of regulations, hopefully all that will help us get to a future where there is no ban and things are regulated, right? I just have a couple of other questions. So now that we're talking about crypto, and crypto at the end of the day is not INR, it's not legal tender, right? It's also not foreign currency in that sense. It's a new category itself, right? But what about some of these terms or these laws which are in place, right? The FEMA, right? Foreign Exchange Management Act, or LRS, which allows you to send up to $250,000 as an Indian citizen outside of India, right? What is your or the industry's take on how these apply, if they do, right? Or whether they apply or not?
Sure. See, as I mentioned, I'm not an expert in these laws, but from my very limited understanding, right? FEMA is applicable on foreign currency and foreign securities, right? And crypto is not a, as per the definition in FEMA, crypto is not a foreign security because it is not backed by any real commodity or an asset. And in terms of currencies, foreign currency. As per the Supreme Court case that happened, right, the IMI versus RBI, RBI clearly mentioned that crypto is not categorized as a currency, right? It is not a legal tender. It is not a currency. So it doesn't fall under the security regime as well as the currency. So technically, as per the law, uh, uh, you can say that FEMA is not applicable, right, on Bitcoin. But if you can also have this argument that El Salvador has made it a legal tender, so it can be a foreign currency at the end of the day, and all of these complexities are there. So nobody has the right answer to it. I think if you ask me personally, I think I would treat Bitcoin as like a software, a piece of code that you are essentially buying, right, by sending the money outside the country, and generally that falls under the LRS mandate, right? So I think that you can call it under LRS because you're essentially buying something, a piece of software or a code. And if you're buying it within India, fine. But if you're buying it from outside India, then you can consider it within that category, and then it should only be allowed with the AD bank, like authorized category 1 AD bank. Then there is no problem challenge for the government, right? Because you are essentially even if you are investing into Bitcoin, and if you are, because see, we understand that India mining doesn't happen, right? So net India is a demand heavy market. There's a lot of demand. So, and that demand will be fulfilled when somebody buys it. So that has to be fulfilled when somebody buys crypto from outside, and that can be put in under LRS. There can be very valid limits that you can put in under that category, and it can only happen via some identified banks who will have the expertise, or there can be, because that is an existing framework, right? You just have to put in one category. Right now it is not there. Bitcoin doesn't come anywhere in that category. Right. So I think that could be one way on how you can classify Bitcoin, and that will also solve the problem of the demand and supply, and you will not see a premium that generally investors see in India as compared to the price that you see on Google. So a lot of these problems are there in the market, which will be solved once the movement is streamlined. Right now, because the movement is not very smooth, right? You will have these problems of premium and all of that. Supply is limited, demand is very high. So that is what my take on this.
Yeah. So when you talk about LRS, right? So I understand what you're saying, which is that if you're sending money, it's probably going to, the Bitcoin is getting generated somewhere, so the money is probably reaching there, right? But when you call it a piece of software or a piece of code, in my mind, I'm wondering, how is it different from me swiping and purchasing something on Amazon.com in the US, right? I mean, it's an external spend. Now, if I'm shopping for a mobile phone or something from the US, I'm not filing that as my participation in the LRS of $250,000, right? It's just shopping for me, right? Similarly, is it possible to look at Bitcoin purchases, even if they are made internationally, right, as money being spent internationally and not necessarily money that is moving out as part of LRS related?
Like it's like a barter, right? You used it to buy for any commodity or any good, just like how you do international transactions using credit cards, right? Yeah.
Correct. Yeah, and you're not also sending the money into a foreign bank where it resides as part of that economy, because even sitting here, if you buy it off of an international exchange, the crypto is with you. The crypto hasn't left. You just exchanged it, and it's not. It's not really going anywhere. So I don't know if it will end up qualifying under LRS. But yeah, I hear what you're saying.
Yeah, I mean, all of these uncertainties are there, right? I think important thing would be to classify, because right now we are in a stage where even the classification of the whole crypto is not there in the books of the government, right? Whether you call it currency or asset, there's whole confusion around whether crypto is a currency or is a crypto asset, because it's a store of value, all of that. I think it just needs to be looked at from a fresh perspective. And I think everyone will have their own, like RBI will look at it from a currency perspective, SEBI will have their different perspective, right? And industry participants will have something, and crypto especially, like not everything is Bitcoin, right?
Correct.
I mean, Bitcoin, Ethereum, Ripple, utility tokens, NFTs, this whole bunch of thing, right? So it's very difficult to put them in one category, right? So I think someone needs to look at it from a fresh perspective, either an independent body who is on top of what is happening globally, and then they keeping a close eye on industry participants, have a very active discussion with the industry players, the investors, so that they can figure out a positive framework, right? And then keeping a close watch on the industry, how it is opening up, how it is growing. I think that should be the way it should grow in the country, right? Just taking any hard steps, right? That ban on this, ban on that might harm also, right? Might also stop the innovation. So I think that could be an interesting way forward.
Cool. True. So I have a couple of audience questions which have been sent to me. Tell us more about the customer base for crypto in India. What are you seeing? What are some of the demographic trends, right? Where are these? What are the age groups? What is the average ticket size? Maybe which parts of the country are people logging in from? Just any overall stats.
Okay, let me revisit some of the data points. So generally, I think a lot of this might be intuitive also. Broadly, crypto is generally what we have seen. The age group is roughly 20 to 34. That is where like majority of the customers lie, right? Around 80% of that. So it's largely something which is dominated by millennial generation. They love it. They love it because they don't like buying gold. It's sort of difficult, and they don't really attach themselves to it as much as Bitcoin. Bitcoin is something you can just buy in minutes, and it's a different feeling of pride, right? So that's the something that we have seen. Largely, traction is from the south of India, proportional to the literacy rate, I can say, or proportional to people or engineers, right? Because so many engineers in Bangalore. So engineers generally, or people who have been coming from a technology background, or somewhat curious to know more about what's happening in the world of technology. They tend to be more passionate and more aggressive about the whole space and the technology. Then in terms of demographics, I think majority, I think, Bitcoin investors, right? Most of the people on our platform are Bitcoin investors. And apart from, if you look at the numbers, most of them buys and hold it for a long time. They don't just buy or sell, they don't trade actively. Overall, we have roughly 3 million customers on the platform who are holding average, I would say, roughly $200 is what their average investment size is, 10,000, 15,000 rupees. And then we have seen it grows over time depending upon whether they are taking the right calls or not. And then generally, right, they start with a smaller amount, but then they tend to increase it over time, depending upon the nature of the market or the timing, right? I think that's broadly what we have observed in our experience.
Okay. Interesting. Very interesting. I think a lot of it is intuitive. From my personal side, I'm just curious to know how many are hodlers and how many are traders.
Most of it are hodlers, right? So generally that is the trend, right? Traders are lower in number, but they tend to do larger volumes. Hodlers are very high in number, but they tend to do less volumes. So broadly, I think in our CoinD6 Go app, which is a very retail specific app, I think we have made it extremely simple, right? For example, even my dad, who doesn't he doesn't know how to buy stocks, but he, without any guidance, he can buy, or his friends can buy crypto. It's that simple. So we have made it simple for hodlers. That is what we intend to bring also on the platform. We feel that hodlers are people who are sticking in it for the long term, are tend to get generate more returns rather than people who are trading depending upon the market movement. So as a company would want people to make more and more wealth. It's like a wealth creation opportunity, right? You would have seen that, I have seen that. So you would want to pass on this sort of tool to most of the people. So natural inclination intent for us is to have more hodlers on the platform, and that's the reason why this app is made extremely simple, and hodling is very easy, right? On that product.
Right. A couple of other questions. It says RBI has already published guidelines for KYC, including video KYC. Is there anything stopping crypto exchanges from using those guidelines?
Yeah, so I think they're referring to VSIP, right? Video-based customer identification process. That is something that few of the banks have started adopting. There are some very stringent criteria there that you have to have on-premise location where you're doing there should be someone on the other side who is doing the KYC. You have to tag it with the geolocation. All of these things are there, which I think some of these are also not very practical, right? And very expensive. I think this depending upon, so we are evaluating that. We are evaluating that so that our KYC standards are we follow the gold standard of KYC. So we're evaluating that. Just that we are also looking at the practical aspects of it, right? Given the whole situation right now, and you need to given the volume, like we have like let's say 50,000 customers coming in on a daily basis. Can we immediately ramp up or ramp down? And it's very expensive also. So I think the better way would be to come up with a technological solution, which can, which is far more reliable. And of course, as a backup, you have a manual layer, which is supporting that. So we already have a KYC process in place, and we are continuously discussing internally how we can further strengthen it. Even SIP is something that we are evaluating, looking also at aspects of it.
Got it. And I'm guessing this would require you to have warm bodies on the other side to manually go through all the verification, right? Which again, like you said, from a scaling point of view, you can't scale it up or down overnight. Yeah. One more question. And I think this is a classic question, which I think everyone interested or in the space has it, which is, how do you access the underlying strength of a cryptocurrency beyond just the market movement of its prices, right? How do you figure out which cryptos are good versus which are not so great?
So I'm not supposed to give any financial advice, but general rule of thumb, do not go by the price, go by the fundamentals. There is a very interesting framework that fintechs has built called 7M framework. And based on that framework, every token that we have listed on the our investing app goes via that framework, right? It talks about market cap, money movement, what is the technical development that is happening on the project, who are the founders, who is the team behind it, how old is the project, how many unique wallets does it have, whether it is centralized or decentralized. So all of those factors also comes into picture. And after our token passes those criteria, we list them on the platform, right? We list them on the app. So I think that is something that we do at our end. But as a customer, I think it's all a matter of research, right? Don't just go by what friends are saying or what is being talked about in the social media. Just do follow your research, because there's a lot of information asymmetry that is there in the space, right?
Correct.
And a lot of things that people talk about might not be very strong fundamentally. Of course, it's easier for me to say that because I look at the space relatively closely, but for a customer, I think whatever extent you can do, I think it's very important to study about it. It might not increase your wealth drastically, but in terms of understanding knowledge, it will give you far more returns than the monetary part of it alone. So it's important that it's important to also read about it. I think that is something that people have a lot more to gain from by reading about it rather than just looking at the price movements. And if you ask me, a lot of these tokens out there, not everyone is going to give you 50x or 10x or 100x returns, right?
Yeah.
If you talk about a 5-year, 10-year time frame. So it's very important to stick to things which you strongly believe in. And unlike the contrary belief that crypto does not have any underlying value, a lot of these tokens, for example, Ethereum, they also have some sort of like a company structure where they make returns. There's like in normal stocks, you can see a P&L or a balance sheet, but in crypto, you might not see in that format. It might not be very easily accessible, but you can still access all of that information, right? What is the value locked in DeFi? All of those are the insights that you see to figure out how popular it is. Getting Ethereum coming up with, let's say, EIP 1559 protocol. What does it mean? Now, everyone does not have
Correct.
the time to go into that much detail, but at least there are some basic fundamentals that you can basically see or read about it, and then based on that take a call. General rule of thumb: stick to tokens which are high market cap, which have a long history, and do not go by something which is just new and people are buying in FOMO. So if you stick to some basic investing principles, do not invest more than what you can. I think these are like standard things that people should follow to make sure that they are safe from an investing point of view as well.
Yeah. So I think, when people ask me as well, what I tell them is, if it's a bull run that's happening, right now is not the time for you to invest, right? Right now is the time for you to research, get convinced, right, that this is a space for you. And when the markets fall is when you should actually be entering, and not necessarily because of FOMO, right? So one last question, they keep coming. Can you also touch upon smart contracts? Right, and do you know of any use cases already in place in India around smart contracts?
I know, as a matter of fact, there are some institutions, right? Even IITs who are working on something using smart contracts. Would not want to disclose it publicly, but there are some use cases that are on a pilot phase, which government is trying to build, whether it is in the field of healthcare or in the field of land registry. There are various use cases, right? Even if it's transportation, supply chain, people are implementing things in the private sector as well as in the government side, right? But none of the use case we would see at a mass scale in India as of now, because the way I see it is, the whole blockchain technology is still, most of it is still basically strengthening the fundamentals, right? Infrastructure has to be very solid first before you think about mass scale implementation. So I think that is the stage where we are at, but the speed at which it is growing, I think it's very fast. So I'll not be surprised if in the next 2-3 years you might see a stage where you are using blockchain, you are using smart contracts without realizing that it is blockchain in the background, just like how you use internet without knowing that it's a TCP. What is a TCP IP protocol? What is HTTPS? What is HTTP? You don't know all of that, right? Like I would not relate. So I think that will happen. You might use it directly or indirectly without realizing that what is happening in the background. So it will happen. I think it's.
You buy some insurance online, and then something happens and you get the money paid, and you don't realize that the money is actually coming from a smart contract, right? You might think it's a human sitting there doing that, but it could all be smart contract driven.
Anything that can be written in code will be written in code. If it is contingent to something, can be done in smart contract. You might see some implementation of it, but a massive industrial level implementation you will see coming 2 years.
Got it. I think that was it. That's all I had. Thank you so much for taking our time on a Sunday afternoon, right? And it's been lovely having you, right? With this, I'd like to hand it back to Akhilesh.
Thank you, Kamal. Thank you, Sumit. This was indeed very useful. Thank you for giving us an overall perspective of a wide variety of things, from the laws to the ecosystem to your customers to how RBI is thinking about it, and maybe some of the global regulators also. I found the point about talent, and also the way you described your customers and how they hodl, a term which I've learned over the last couple of months. Very interesting and fascinating. Thank you for the time on a Sunday evening. We look forward to being in touch with you, and as we progress, maybe we will be in touch with you as we think through our final conclusions and thoughts on this. Thank you.
Sure, absolutely, absolutely. It's a pleasure talking to you today. Totally enjoyed the conversation.
Thank you. Thanks,
Thank
Sumit.
you.
Thanks, everyone.
Thank you.